All right, let's see who we have on the call before we get started. I'm Tasha Hodes. I am here in Atlanta. Been trading for a few years now. Really pumped about Epic and the value and just sheer quantity of education that we get here. It's more than I think we can ask for. But yeah, so I'm under Damo, and we do this call Forex for Beginners every Tuesday at 6. And basically, learning Forex can be like learning a second language. It can be a little intimidating. So we like to host this call to go over a lot of terms that you will see in the back office, concepts that you'll hear the Epic educators talking about on the live call, and just kind of take it from a beginner perspective and sort of introduce you to concepts so that you won't feel lost or intimidated when you're in the back office and when you're on those live calls. So that's really why we do the class. So the way it works, we'll record this class. And if you miss a step or if I say something too fast, you can go back and catch the recording. So in the chat, I have placed my YouTube channel, and I will paste that again. And so either late tonight or by tomorrow morning, the class will be posted. So let me share that link again. And so the way it works, I'll spend the first maybe 15 to 20 minutes, no more than a half hour, going over a concept, more like 15 to 20 minutes. And then we kind of jump right into Q&A. You guys come off mute or type your question in the chat. Normally we head on over to TradingView and go over some introductory concepts there and kind of take a look at the charts. So really informal, really informal. How's everybody doing? You guys ready for the holidays, ready for Christmas? It's a little different here in 2020. It's definitely been an interesting / challenging year. But where are you guys from? I'm from Atlanta. Either come off mute or type it in the chat. I see Rob on the call.
H-Town, what up? What up? Let's do it.
How are you? You have the most amazing energy.
Thank you.
Yeah. All right. Glenda's from Texas. Waylo is from South Carolina. What part? My dad lives in Sheldon, South Carolina. So where are you, Waylo? What part of South Carolina? Okay. I don't know where that is. Utawaville? Am I saying that right? Is it near? So my dad is about an hour from Savannah, and he's about a half hour from Beaufort. Close to Charleston. All right. Okay. Yep. Gotcha. Glad to have you. Glad to have you.
Nothing but woods in the country.
Oh, I hear you. Hey, that's why I like to go to South Carolina. My grandma was Geechee Gullah.
Yes, it is.
I could as a kid, I could never understand what she was saying. I never could. And my dad, his dialect is the same too, but I love it. He is the best cook I know. When he does shrimp and grits and just everything, I love his cooking. All right. Well, welcome everyone to the call. Give me a second and I will share my screen. Let's see. Do we have any updates? I know there's a big event coming up in Vegas, January. I may have the dates wrong, 9th to the 11th, somewhere around there. I don't know if I'll be flying by that point, but I definitely hope to resume traveling in 2021. I would love to meet everyone. The energy here at Epic is really, really good. So cool. All right, so give me a second and I will share the slide that we're going to talk about tonight. So I had a hard time labeling the discussion that we're going to have today because it could go in a lot of different directions. I see we have Miss Daisy on the call. Welcome, welcome. Happy Tuesday. So let's just jump right in. All right, so real talk. I want to talk about issues with our trading account and address if there are any of us who have accounts that are not growing in the way that we want. I want to give some real life examples that I have lived, examples that, show what I did not know as a new trader, and lessons and values that I wish I knew when I was first starting out. So we're going to take a look. Let's say, for example, that we're doing 10 trades in a week. Now, the time period doesn't really matter. It could be 10 trades in a day, 10 trades in a month, whatever your cadence is, however often you trade. We're all on different paths. Some of us have more time than others. So some of us may be in longer trades because we don't have as much chart time, due to work and other commitments. Others of us have the charts open all day, so we may be putting in more trades. But no matter the amount, the principle is the same. So whether you're taking one trade a day or 10, we want to talk about this principle. So looking at this chart, let's say we take 10 trades and half of them we win, half of them we lose, and in no real order. So we're going to win the first two, lose the next two, win, lose, win, win, lose, lose. Okay. Now, for this scenario, let's say that our risk to reward ratio is 1-to-1. And let's do a quick review of what risk to reward is. So let me just type that out. Your risk is the number of pips that you can lose if you lose the trade. Number of pips lost compared to your reward, which is the number of pips that you can win. So we're not going to really talk dollar value yet because we all have different size accounts. So we just want to stick with the principles. So for every trade that we take, we need to be aware of the risk to reward ratio before we enter the trade. And unfortunately for me, I didn't learn about risk to reward ratio, a year or two into my trading career. So let's take a look at a 1-to-1 risk to reward ratio. What that means is the number of pips that I can lose if I lose this trade is equal to the number of pips that I can win. So if I'm risking 20 pips, that's my risk. Then my gain, if I win the trade, then I win 20 pips, 1-to-1 ratio. It's the same as if you're risking 10 pips to gain 10 pips or risking 30 pips to gain 30 pips. They are the same. So let's say in this example, I'm only at 50% accuracy. Half the trades I win, half the trades I lose. So when I win plus 20 pips, all right, I'm up. Got a little win streak. I won the second trade. I'm up 20 pips, 40 pips, for the day or for the week. Then I kind of lose 2. So I'm back to 0. So on and so forth. But at the end of the week, I have won 5 trades and I've lost 5. So with this scenario, I would have gained 100 pips. That's pretty cool. But my losses, I also lost 100 pips. So at the end of the week, I don't really have anything to show for my trades. This isn't necessarily bad. The good thing is I've lived to trade another day. I didn't lose any money, so I definitely don't want to make it seem like it's a bad thing. But in terms of growth, we didn't have any real growth in the account for this week. 1-to-1 risk to reward ratio. Okay, so I won't ask anyone to put that in the chat if we can relate. How about this? Put a 1 in the chat if you can at least relate to this, that you've had a week or 2 or maybe 3 where you just kind of broke it even. You didn't gain, but you didn't lose. So put a 1 in the chat if you can relate to that, or you've experienced that at least once. Yeah, for sure. We have been here. But like I said, it's not a bad thing. We lived to trade another week. We didn't lose money, okay? Not so bad. So let's make one minor adjustment and look at this same scenario again. So on this next slide, the difference that we're going to make here is that we are risking more pips than we are gaining. So we have a 1 to 2 risk to reward ratio. So what that means for this example, our risk is going to be 40 pips, but our reward is only 20. This is the only thing we're changing, is the risk to reward ratio. We're still at 5 out of 10 trades. We still have a 50% accuracy. So the only difference is we're still winning our 20 pips, but when we take a loss, it's negative 40. So what's it doing? Look at the first two. I'm up 40 pips for the week. One trade knocks me back down to break even. So then when I lose the next trade, now I'm negative for the week. I won my 5th trade, but I'm still in the negative. Then I had another loss. To sum it all up, we won 100 pips for the week, just like last week. But look at those stop losses. They were so big based on our risk to reward ratio. We lost more than we gained. So not only did we have no growth in the account, but we are down for the week. Down for the week. So definitely the first slide was better than this one in terms of what we have to show in our account. So this is, real talk this week. There is no judgment zone, because I will be the first one to put a 2 in the chat to say I have been here. So definitely I definitely can relate. All right, so let's make one more tweak and see what happened. All right, we still have 5 trades for the week. We are still at 50% accuracy. We only won 5 out of 10 trades, but look what changed. I'm gonna highlight this and put it in a different color. Let's make it green. Now our risk to reward ratio was 2 to 1. So an example means that our risk was 20 pips, kind of minimal, but our reward was 40 pips. And I need to make sure I have the right ratio here, because if we do the risk first and then the reward, yeah, we need to make that a 1 to 2. And so if I correct it here, because we're doing the risk first, that would be a 2 to 1. Got it. All right, so here we go. Good news. We're still at 50% accuracy. We won 5 out of 10 trades, but every time we won, we gained 40 pips. And each time we lost, we only lost 20. So isn't it amazing that our accuracy has not improved? The only thing we changed was the risk to reward ratio, which after an entire week or however long it took you to do the 10 trades, 100 pips worth of growth. And so depending on your account side, that could be $10, $100, $1,000 or more, because we all have different account sizes. And then the last example that we want to show is what happens if, and we're going to make this a 1 to 3. What happens if we increase our risk to reward ratio? So let's say our risk remains 20 pips, but our reward, we're going for bigger trades now, and we're getting 60 pips. Still only 50% accuracy. So we're only winning half of the time. But each time we win, we're pulling in 60 pips. And each time we lose, we're only losing 20. So by the end of the week, we are up. We gained 300 pips for the week. We lost 100. So we netted, or we gained 200 pips total. So depending on our lot size, $20, $200, $2,000. So that's the example that I wanted to talk about, or the tweak that we can all consider in our trading. Now, sometimes, I think Coach Max has coined the phrase pip and dip. Sometimes we're only going for 20 pips. So that's a different type of strategy. But what I wanted to introduce you today is look at how your risk to reward ratio can help to grow your account, because I know that's what we are all after. So then the question naturally becomes, well, how do I go for longer trades? How do I identify trades that can get me not just 20 pips, but 40 pips, 60 pips, and even more? How do I find those trades? Where are they? Where are those setups? And where are they hiding? So with that, we've talked about chart formations here in the class, and we've talked about head and shoulders and hammer formations and inverted head and shoulders. So basically, we're going to identify some chart patterns that are key for reversals. And if we can train our eye to see reversals, and these reversals, it really doesn't matter which time frame you're on. You may prefer the 1 hour. You may prefer more action down on the 15-minute. You may be more of a swing trader, so you may do your analysis on the 4 hour. No matter what time frame you're on, if we can train our eye to identify these reversal chart formations, then we can get in on the beginnings of a new trend. If price was in a downtrend, if we can identify a reversal pattern, we can get in the trade from the beginning of an uptrend, and that's how we can gain more pips. Okay, so put a 7 in the chart in the chat if that makes sense to you, about how to identify setups with more pips. A 7 in the chat if that makes sense. If not, come off mute and I can try to clear it out. All right. Thanks, Glenda. So with that, let's go on over to TradingView. And let's see if we can identify some of these reversal chart formations. So give me 1 second and I will share my TradingView. And it's close to 6:20. So if you guys have questions, feel free to come off mute and we can talk about it. And there is a couple of things that I want to go over here on TradingView. I may leave my RSI indicator up. Normally I like to have a clear chart, so it's not to confuse you. Let me make sure my screen caught up. Okay, so now we're looking at GBP USD. If there's anyone who's not familiar with TradingView, up to the left is where you put the Forex pair that you want to identify or take a look at. And here you choose the time frame that you want to do your analysis on. And the popular ones are the daily, 4 hour, 1 hour, and then maybe the 15-minute to actually get your entry. So, our green candles are representing our bullish movement. That means price is going up. And our red candles are indicating bearish movement, meaning price is coming down. So here's one thing that I want to point out that I think can help us with our entries as well as with winning trades. Let's say that we identified an uptrend, okay? So here is like a transition point, and we can actually talk about the candle formation here. But before I forget, let's say we have identified this uptrend. So I'm going to draw a rectangle to pretend that we can't see this part. So backspace. Let me right click. You can always right click on a shape in TradingView and go to settings. And I'm gonna make my background opacity pretty thick so that it's hiding the candles. Okay, so let's say this is the hour chart. Let's say we have identified this uptrend, and you know what happens. We move away from the chart and we're doing something else. We pull up GU and we look at all these pips we have lost in this uptrend. And we think, I've been watching this pair. I go away for a little while and now, it's called FOMO. Does anyone know what FOMO stands for? I'm going to type it in the chat. Come off mute or type it in the chat if you know what FOMO stands for. Because it's definitely a challenge, I think, for new traders. Heck, even
fear of missing out.
Yes. Let's type that out. Fear of missing out. And I don't know why this is such an issue with pips. But let's say we come to this chart and we look at we look at all these pips. There we go. We look at all these pips that we have missed, and what do? Price is there at this candle, and we say, I am going to jump in this uptrend because, hey, it's an uptrend, right? I can get in. I haven't missed it all. And what happens? We make our entry here, and what does price immediately do? It pulls all the way back. Now, some of us can withstand being in drawdown. Yep. Others of us can't. Okay, I like to talk about my cousin. If price goes down for a couple of minutes, she is out the trade and she takes the negative. Now, in this case, if you can weather the pullback, price comes back to this zone, this purple zone here. Price always likes to come back to the zones where it's comfortable. And eventually it does take off. But how much easier would this trade have been? Let me get rid of that square. How much easier had this buy trade have been if we had entered, say, here? So let's change that shape or that color to blue. But let's look at all the different places that we could have entered this buy. So I've identified another zone that's here. So there's a zone and here's a zone. So obviously the best place to enter a buy or a sell is when price is hugging that zone. And it's when it's close to that zone, right? What's the problem with that though? So let's identify, and I'm going to use an up arrow. I'm going to place a marker on all the places that would have been a really good entry. This would have been a good entry. And, one of the first strategies that we were probably taught is just break and retest. So let's just go over that strategy. It's kind of one of the most basic Forex strategies for buying and selling. Once you identify where your zone is, and I've identified 2 zones on this chart. In a zone, if you just had to give it a definition, it's a place where price kind of comes back to often. In this case, it's you notice that price is sitting on this zone here. It's kind of sitting on the zone here, sitting on it here and here. You know, the more times you can identify where price is accumulating, that's normally where a zone is. And so we also have a zone here where price was resting. So this is like support. It couldn't go beneath it. So once you have identified your zones, then this candle here is where price broke through the zone. It went straight up, right? That's not necessarily the best entry, because the strategy is called break and retest. And it's basically, it's a break and retest of the zone. That's the rest of the words that's never really used. Break and retest of the zone. So here is where price broke through. The retest means it's going to come back and visit. So retest means price is coming back to visit it again. So here price broke through the zone, and then the retest is when it comes back to touch it. So this green candle here would be an excellent place to get into the trade. And look how close to the zone that candle is. What's common to do is when you choose your stop loss is normally, 10 or so. I don't want to give a number, but it's below this support zone, somewhere below this support zone. So there are a couple of problems with entering the trade here. One, where are you going to put your stop loss? Since we know how much price loves the zone, technically the safest place to put your stop loss so that you're not stopped out is underneath the zone. But look how many pips that is. Let's use our trusty ruler and go from here all the way down to the zone. And then we can, 1 second. When in doubt, always use this back arrow for trading view. Oh, I have that. When this stay in drawing mode is set, it's good to use when you want to do a lot of repetition, but it definitely gets in the way if you're not doing that. So if trading view is acting up on you, make sure that's not selected. So this is like the default when this is selected. So now I can, delete that. But if this price was close to 1.3426, let's type that out. I like to calculate pips the old-fashioned way. 1.34, let's just round it up to 20. Let's say that's where our entry was. And then at the bottom of this zone, 1.33, let's just round that off to 100. If we subtract, we're going to get 120. And we're on the hour time frame. So it's, the pips are a lot more. 120 pips is kind of a lot in terms of a stop loss. But when you take a trade that far up from the zone, that's why it's so dangerous. Not only because your stop loss has to be that big, but if you enter here, look at that. You're negative all those pips, and you got to wait a long time before you're in profit and out of drawdown. So here, the blue arrows we'll use for our best entries. So after this break and retest, here's one good entry. Let's say we missed it. It's okay. Price goes up just a tiny bit and retests again. Let me kind of zoom in. you can see where the bottom of this wick, you can just do Control C and Control V. The bottom of this wick hit the zone, so you can actually do a buy entry there if you missed the first one, or if you're a person who likes to make multiple entries. So the point is, you want to take your buy and sell trades as close to the zone as possible. But, real talk, let's talk about why we don't. If we take the trade here, or if we take the trade here, none of this is visible to us. So look at how the chart looks when we take that buy. A lot of new traders and just even intermediate, you have to be comfortable taking the trade before the move happens. In order to get those really good risk to reward ratios that I showed on the PowerPoint slide, you have to take the trade before the movement happens. The good news is, taking trades here at the zone, you have a very reasonable stop loss. So you're not risking that much. But what happens is that we wait until we see some action. Because we're thinking about the trade. We kind of feel like that's a break and retest. We think price is going to go our way, but we're kind of unsure. And then what happens? Price takes off and you say, I knew it. I knew it was going to be an uptrend. And then you try to enter the trade here at the top because you can see the uptrend. A lot of times when you can see it, it's not the time to enter because price has already taken off. Now, there is some good news. If you miss it, what do you have to do? Instead of taking the entry there, just wait for the pullback. Now the process starts all over again. So I will create another blue arrow. Now price is giving us additional places to enter this trade because it is close to the zone. Again, the move has not happened. So for these good entries, there's nothing, saying, oh, great, there's going to be a very big uptrend coming. You kind of have to get accustomed to taking the trade before the move happens in order to have a really good risk to reward ratio, or just in order to have a small risk altogether. And in the case where the move happens, don't jump in here because you know a pullback's coming. A pullback is coming. This TDI indicator, that's what you're looking at the bottom. It's the Forex LG Sniper TDI. On my chart, my RSI is this yellow. And I think we covered the RSI last week, the relative strength indicator. The RSI typically ranges from 0 to 100. But once you hit that 70, especially 80 range, price is normally, to review quickly what we talked about last week, price is normally overbought and is headed for at least a pullback, if not, a reversal. So another indicator that you did not want to take the buy here, and we're going to mark this in purple, is that, and you can use this dotted vertical line for that entry. Look at your RSI. It's clearly like between 70 and 80. That's definitely not the time for a buy. That's the time for a sell. So that's a great indicator if you want to have it on your chart to keep you out of FOMO, keep you out of fear of missing out. Once the move happens, if you don't want the drawdown, which we never do, take a look at your RSI. Definitely have this on your trading checklist to add before you do a buy or a sell, and wait for the pullback. The best part about trading for me, when I have trades that are winning, the best ones are the ones that are effortless, where there's very little drawdown, and it hits your TP, and it's just so encouraging. It's the best feeling ever. When you enter a trade here with this purple arrow, this is a very painful trade. Now, if you wait it out, eventually, you gain a few pips and at least you don't lose. But in order to cut down on the pain and the headache, focus on those better entries. And this is where I know Elise always talks about back testing. Pull up a chart that you like, a pair that you like, some of your faves, and just imagine calling out trades. There's a great little tool that you can use, this bar replay. And if I click on that, I can remove those candles. And so then you can, pretend, okay, what would have happened if I had placed the buy there? And then you play it back. Let's see. There it is. It's just a little slow. And now it's going to slowly reveal what would have happened. So I really like that bar replay because you can go back and practice trades. All right, guys, I've been talking for a minute. It's 6:38. Come off mute. What questions do you have? Is it making sense? Can anyone relate to not?
Yes, it's making a lot of sense for me.
Oh, great. Who's that speaking?
Rob.
Hey, Rob. Yeah,
Hey, how you doing?
I'm doing all right. I wish I had learned this lesson earlier in my career, that the best time to take a trade is before you have the visual verification that the trend is going to happen that way. We have to train our eyes to go ahead and jump in and do it. And if we lose, it's okay because our risk was minimal and we protected our account.
Yes, ma'am.
All right. Anybody else? Any comments? Any questions? We have Savvy on the line. Hey, Savvy.
Hey, I'm here. How you doing? Oh, sorry. Go ahead.
I'm sorry.
Hey.
I have a comment. I noticed, like, you see that second blue arrow?
Yes.
What I would do is, like, I'll sit there and I'll see it. I'm like, watch, it's gonna go up, but I'm gonna wait until that next candle close just to be sure. So I'm going in on that third big one, and then it's like I'm kind of in there late.
Yeah. Now you
kind of wait.
Yeah, you could go in after that second green one. That's not too bad.
Yeah, that's what I've been doing lately, because like you say, I'll normally be like at that purple arrow, like,
yeah,
ooh,
guilty as charged. I understand.
Yeah, I've learned to do that. So I just wait, and then next thing I know, I feel like I've waited too late.
Yeah. But that's where we just have to have the confidence to say another move is coming. But FOMO is so real. It is so very real, especially when you were already contemplating the trade and then you see it take off. But look, it gave us, some other entries. This is where,
as much as like you say, you see it going and you know it. I'm done.
For sure. Now, this is where, the smaller time frames are a bit more useful because you don't have to wait as long for that next entry. So really, if you're trading on this hour time frame, you're talking, maybe next day or so, hours later before that next entry comes. But what I've learned is that it's better to wait and have the joy of an easy trade than to jump in, especially up here at the top. So thanks for your comment. Anyone else? So, the same thing, it works in reverse for ourselves. Let's see if we can find another example. Let's see if we can find, or what I can do is just mark another zone. So what I'll do is click on this one. I'm on a PC, so I can do Control C and Control V to copy and paste. And I can identify this zone here. So, with this break and retest strategy, one disadvantage is we don't always get a retest. So, there are some moves that we just may miss. For example, when price broke through here, it sort of took off. And it never really came back to retest that zone, if you look at that first bullish candle. So, that's a move that we probably just need to let happen, especially if you're trading zone to zone. Because what happens if, let's do this. Now we didn't talk about this. Yeah, we sort of did. So if you're not able to take a trade closer to the zone, sort of that safety part, another option, which, works a lot of the times, is to at least wait for a pullback. So let's say we missed this move. We missed this trade because there was no retest. Price did not give us a break and retest. It only broke. Okay. Now, after this pullback is done, some would say, well, maybe I could enter my sell here. Now this is, debatable, because you're kind of like what we refer to as no man's land, where you're like in between the zone. So this one is not as sweet as a break and retest at the zone. However, if you were going to enter a sell, you definitely would want to enter. Let's leave that purple one there, and let's put a blue arrow here. Settings. So if we had to choose, because if we enter the sell here, of course, it goes straight into a pullback. It's a much easier trade here at the top after the pullback is done. So these are just, some options. However, if we were to borrow our rectangle, when you make that trade, you can't see that move happening. So this is definitely, something that we have to conquer as traders, is being comfortable and okay taking the trade without seeing before the move actually happens. We are not necessarily predicting, but we are reacting based on the price action that we've been given. So any other questions about break and retest? I found when I've used this strategy before, the higher the time frame, the better, because there are less candles to contend with. On that 15-minute time frame, it's really busy down there, and it's a lot of activity. It's a lot of noise, so to speak. Price action is a lot cleaner. There are less tricks. I find the higher up you go. So when I was doing the break and retest strategy, the 1 hour was my favorite. However, it is a much more relaxed pace. It's very, depending on your trading style and your personality. The 15-minute it's moving and it's, high paced. You can compare it to the city life, whereas the 1 hour is more the country. It's a little bit more peaceful. So depending on your trading style, that'll dictate which time frame that you'll kind of gravitate to. I like the 1 hour because I don't necessarily have the patience for the 4 hour, but I find it definitely a lot clearer picture than the 15-minute. Any other questions or comments? Make sure I haven't missed anything in the chat. Yeah, Glenda, I was taught not to trade between the zones, just wait for the next zone to enter the trade. So I find myself always missing the money move. Yeah, in this case, when you didn't get a break and retest, then yeah, it's definitely more risky to trade it here. I'll tell you, did you guys ever learn about the trend line break? Because what you could do, so when price fell down, let me get rid of this arrow. Let me get rid of this one. See if I can make it bigger. So when price entered this cell, if I drew a trend line, make sure that my body is touching. Here's where I can identify the pullback because price no longer respected that trend line. And that's where the pullback started. And then I could even do another trend line for the pullback. And when price broke and closed below, that could be my signal to get into that sell. Now I am in the middle of the zone, so there is a risk there. But you can use those trend lines as a way of helping you decide when to enter the trade. So here's the first trend line for the downtrend. And when price broke above it, that was the start of the pullback. So now I want to see, well, how long is that pullback going to be? So just do another trend line for the pullback. Notice this candle broke below it. So the pullback is over. I can go in for my sell. So I've used the trend line breaks as well as an indication. No problem, Glenda. And so what I'm doing for the downtrend, I'm kind of going on the top. The trend line is on the top. And then for my uptrend, I'm kind of going below it. So I'll know when the candles are no longer respecting that uptrend. And I love trend lines. That's probably my favorite strategy. Now, of course, I'm learning from Elise and Damo and Jojo all about, the market maker method. So those are my strategies of choice for now. But prior to that, I was a trend line fool. So trend lines can give you all sorts of indications. So let's just end the night on that. I'll draw a few and show you where you can get some entries. So if we identified this uptrend here, then, and I like to include my wicks. So if I were to identify a trend line here, as long as price is respecting this trend line, I know that my uptrend is intact. And as soon as price kind of breaks that trend line and closes below it, then I know, one, to exit my trade if I'm in this buy. And now I can not necessarily turn around and jump into a sell, but if nothing else, I know that it's time to exit my my buy. So the trend is our friend. I think it's the way it goes. And also, when price touches the trend line, those could also be additional entries for your buy. So if I can move that one there and there. All right, everyone. Any other comments or questions? If not, we can wrap things up a little early this evening. Give you 9 minutes back. And happy trading, everyone. And I think the way the holiday falls, I should be doing classes for the remainder of the year. I don't think I'm taking a break from this class because I don't think it interferes with the holidays. But if so, I will keep you all posted. So for now, thank you, Savvy. For now, I'll see you all next week. And I'll get this uploaded to my YouTube either later tonight or in the morning. All right, everyone. Good night. Thank you, Alo.